A very good afternoon, ladies and gentlemen. Welcome to the 24th of November weekly market review. We are going into the last week of November already. I think most of you can't wait for Christmas to come sooner. And of course, we have today with us Mr. Gerald Wong. How are you, Gerald?
Hi Sunny, hi everyone who has joined us today at the weekly market review. Very well. Just came back from a short holiday last week. But I think we have seen quite a lot of movements in the market. So hope to be able to share some of these updates on what is driving the market volatility.
Wow, no wonder you look rejuvenated after your holiday. Over the weekend, Sias is at the Tiger Experience event at Plaza Sing, and we met some of you over there. So very happy to see you all near the holiday periods. And on the market side, we see that last week we did have some significant pullbacks from the major US market, including Singapore, which did not manage to hold the 4,500 point level. But then macroeconomic data, the GDP forecast seems to be very positive. So I don't think there's a lot of worry on the Singapore market. On the US side, I think Gerald will share with us more today on Nvidia earnings and some of the AI development. So I will not hold back time too much, and I'll let Gerald take us through the developments on the Nvidia earnings.
Thanks, Sunny. Before we start, just a disclaimer that today's sharing is not tailored to your individual investment objectives and risk appetite and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you can access various online resources and investor education programs. So like Sunny mentioned, we saw a pullback in the market in the past week. S&P 500 at one point falling below 6,600 points, but with a slight rebound on Friday, closing at 6,603 points on Friday. The losses were led mainly by the tech stocks. We see here Nasdaq declining by 2.7% due to some of the concerns on AI spending, which I'll go through in more detail later. STI down by 1.7%, slightly better than the S&P 500 because like what Sunny mentioned, we saw positive expectations of the GDP growth for this year, as well as further measures to revitalize the Singapore equities market. So what is really driving this pullback? It is due to the concerns on the AI sector, whether we are seeing a bubble there, whether valuations are too stretched. So I think some of the charts that I'll go through will highlight these concerns. So firstly would be whether companies are overspending on AI. This is a chart that shows the US hyperscalers, which are the cloud companies, spending on CapEx. And we have seen this sharp increase over the past 1 year. And based on the guidance that companies such as Amazon, Meta, Microsoft, and Alphabet have actually announced, it is expected to actually increase further into the next few years. So the question is whether all of this spending can actually lead to increased profits and whether that will actually lead to positive earnings for these companies. Okay, at the same time, we have seen an improvement in valuation across AI companies, whether they are publicly listed companies, whether they are private companies. So we see here that in terms of the valuation of the late-stage AI companies, they have now actually exceeded the previous peak in 2021 before the higher interest rates led to a fall in their valuations. So once again, this is leading to concerns as to whether valuations are now too stretched. Okay, so if we were to look at the latest sentiment around AI amongst fund managers, so we see here that a record number of fund management companies are saying that companies are over investing. So that really reflects the chart that I showed earlier, in that many fund managers now think that the AI companies are over investing and they want the companies to improve on their balance sheet instead. So some of these charts do reflect the shift in investor sentiment around the AI spending and leading to the pullback in the market. Okay, so with that, we have seen the STI coming down in the past week. We've just had two gainers amongst the STI, and these are names with relatively resilient dividends, capital-light integrated commercial trust, as well as venture corp. Okay, amongst the top losers, we see some of the more cyclical names, such as Seatrium, SETS, Semcom Industries, as well as Genting Singapore. I mentioned earlier that the Singapore market is also supported by some of the measures announced to revitalize the Singapore market. So I'll go through some of the measures that have been announced, especially the new ones that were announced last week. So first and foremost, the 5 billion equity market development program, which was intended to develop the local fund management industry and increase investor participation in Singapore equities. So in total, we have seen 3.9 billion of this 5 billion being placed across 9 asset managers as of November 2025. And that includes 6 new fund managers that were awarded last week. So that would include Amova Asset Management, AR Capital, BlackRock, Eastspring Investments, Lime Global Investors, as well as Manulife Investment Management. So those were the 6 newly awarded asset managers on top of Avanda, on top of JP Morgan Asset Management, as well as Fullerton Fund Management, which were previously awarded this equity market development program. Next, we also saw the announcement of a SGX Nasdaq dual listing bridge, which allows companies to simultaneously list on Nasdaq and SGX with a single prospectus. So this is expected to go live around mid-2026 and will then allow companies to tap both of the exchanges when they are thinking about their listing venues. Next, we also saw an announcement of a reduction in the board lot size. So for those stocks that are priced above $10, the minimum board lot size will reduce from 100 units to 10 units. So this will lower the minimum investment size and aim to broaden retail investor participation. Last but not least, we also saw the announcement of the Value Unlock program. This is aimed to develop listed companies' competencies in corporate strategy, capital optimization, and investor relation. So 30 million of grant has been set aside, and that will aim to uplift listed company shareholder engagement practices, support their investor and media outreach, and this is aimed to foster greater investor engagement, which will hopefully benefit some of you who are joining us in today's weekly market review. Okay, so those were measures that are announced to boost the Singapore equities market. At the same time, we have the Nvidia earnings that were announced last week, and that was once again a focal point of the market. So we see Nvidia's share price coming down after the recent highs due to the AI concerns that I shared earlier. Initially, the share price bounced after the announcement of the results, but the shares continued to sell off due to the continued concerns on AI spending. So overall, we saw Nvidia reporting a strong set of results. The third quarter fiscal year 26 earnings were above market expectations. We see here quarterly revenue of 57 billion in the third quarter of FY26, representing a further growth from the previous quarter as well as the previous year. In terms of the key drivers of growth, data center continues to be a key driver of the growth, where the revenue increased to 51 billion in the latest quarter. Okay, so we also see commentary by the CEO Jensen Huang, where he said that the Blackwell sales are off the charts, cloud GPUs are sold out. So that reflects the strong underlying demand for some of his AI chips. And we see here also some comments that he believes that we have entered the virtuous cycle of AI. The AI ecosystem is scaling fast with more new foundation model makers, more AI startups across more industries and in more countries. So it really seems like AI is going everywhere, doing everything all at once. Okay, so in terms of the profit, we also see a sharp increase in Nvidia's profit. Announced a profit of 32 billion in the third quarter of fiscal year 26, with the sharp revenue increase. The gross margin was at 73.6%, a slight improvement from the previous quarter. Okay, so at the same time, Nvidia has also provided positive guidance for the upcoming quarter, revenue of 65 billion expected. So that represents a further increase from the previous quarter, and gross margin of 75%, once again representing an improvement from the previous quarter. So that once again reflects the confidence the company has on the underlying AI demand. Okay, not only is the company generating a strong profit, the cash flow generation is very healthy as well. So free cash flow of 22 billion in the most recent quarter. And with that, they use some of this free cash flow for share repurchases amounting to 12.7 billion in the most recent quarter. Okay, so that in a summary is Nvidia's earnings. This is a relatively quiet week in terms of the earnings announcement. We have some of the Chinese companies reporting, including Alibaba on 25th of November. And we have a shorter trading week with the US market closed on Friday. So with that, I'll hand over to Sunny, who will share the technical analysis.
Okay, thanks, Gerald, for that sharing on Nvidia. Indeed, this week will be a slightly quieter week. I think last week also there wasn't much of a development, and that is the reason why a lot of attention was focused on Nvidia earnings. And of course, the key sentiments or the key headlines that have drive market last week lower was due to the concerns of AI that Gerald talked about. And of course, the expectation that the rate cuts may not happen in December, hence market pulled back quite a bit. That is my take on how the overall market is performing. Investors generally do not like uncertainty, and hence when uncertainty starts to appear, everyone starts to leave the market. Okay. So on the Singapore side, the STI market, okay, you can see we also have that pullback due to the sentiment, the global market sentiment towards the downside. And this morning, this Monday morning, we are seeing STI almost flat, up just 5 points or 0.1%. Okay, so we are right where the 20 days moving average is, and that is at the level of 4,487 points, and that is the pivot point that we are looking at. Okay, and the next support level coming in at the blue line, which is the 4,411 points, that is the 50 days moving average, and likely going to find confluence with the lower bound of the Bollinger Band in black at 4,390 points. So the 4,400 points will be a very strong support for the STI index, okay, this week and next week. Looking at indicator-wise, we still see that the MACD is negative, and that trajectory is showing us that the MACD line is going to go down further, and hence the likelihood that we will see the 4,400 point support level come into play with a high probability. On the RSI indicator, we are now right at the middle of the RSI sort of range. We are at the 50-point reading, which is what a neutral point reading is. and that means that it's not telling us of any indication of where the STI will move according to the RSI indicator. Okay, so with all these technical signals that we are seeing, we still see that STI would likely pull back further a little bit more towards the 4,400, and that could be a strong support. Waiting for confirmation from the technical indicators to say that there could be a rebound happening, either from the MACD's downside momentum sort of weakening, or an uptick in the RSI reading. Okay, so we will update you as we go along the weekly market review into the month of December. Next, let us move to the US indices. So like what Gerald mentioned, the pullback in the US side, but then we do see some kind of a stabilization on the US market on Friday at least. The Dow is up about 1.08% on Friday, closing at 46,245 points. And that is also right above the 100 days moving average, which is the amber line that you see here, now at about 45,730 points. So the 46,000 handle will be a very good support for the Dow Jones Index, okay? And looking at some of the key indicators, MACD and RSI, like I mentioned earlier, the MACD is still negative, but we can see that the downside momentum has been weakening already. There is some subsiding of that downtrend momentum according to the MACD histogram. So that is a good sign, and hence my opinion is that the market is stabilizing around the 46,000 handle for the Dow Jones Index. And for the RSI, we also have an uptick here on last Friday as well, now reading at 43. The low last week on Thursday was around the 36 point level, okay? So 46,000 will be the support level for the Dow Jones Index. And of course, we are trying to sort of move up, breach the 50 days and the 20 days moving average now around the 46,600 and 47,100 level before we sort of look at the all-time high again on the Dow Jones Index, which happened just 2 weeks ago, I believe, on 12th November at around the 48,431 points. Next, let us move to the broad index, the S&P 500, which was also up close to 1% last week at 6,600. We managed to close above that 6,600 key psychological level. And that level is also where the 100 days moving average is, as you can see over here, the amber line, okay? So key support level has been triggered. So we are likely to see at least a technical rebound. And of course, the key resistance level, you are looking at the two moving average, the 20 days and the 50 days. Now at 6,760 points and 6,710 points respectively. So needless to say, MACD has shown sign that we are stabilizing. The downtrend momentum is weakening already, and we could see some buyers coming back into the market to support the broad index. The RSI has also ticked up to the 41 point level from Thursday low of 34 points. So that is also another good sign. And I think that this could be an opportunity to play, to get back into the US market to play towards the Christmas period. Lastly, the most heavily impacted index would be the tech-heavy Nasdaq Composite Index because of the tech valuation concerns. So this, coupled with the uncertainty in the rate cuts, has sort of pushed market quite low, including some of the growth stock, which we are also known as the tech stocks. That means that we are now seeing that the Nasdaq is the most pressured index. It just gained only 0.88%, the weakest among the 3 US indices rebound last Friday. But that key level was also triggered on the 100 days moving average at 22,050 points. So resistance level, we are now looking at the 20 days and 50 days moving average at 23,185 points and 22,880 points, okay? So MACD indicator is showing sign that downtrend momentum weakening in the past few weeks. And the RSI has shown a bit of uptick from the low of Thursday reading at 35 points to 39 points. So that's a good sign that the index is stabilizing. And going forward, we would be looking out for new catalysts for the index to rebound up further. So my opinion is the rate cut probability. So let me just flash it on the screen here. Has been sort of ding-donging week on week. So there is a lot of differences from what we see last week. We saw that last week there was a majority, more than 50% are saying that there could be no rate cut. But this week we see that a rate cut is happening because there were some Fed comments that the New York Fed chair has said that he still see a rate cut happening in December. Hence, the probability now stands at close to the 70-point level where we will 70% level where we will see a 25 basis point cut. And that is also my opinion that we will likely see a 25 basis point cut in December. And this could ease some of the concerns that we saw last week where market pullback due to a rate cut not happening. So I believe there will be a rebound in the US market this week, and we need to watch out closely to see if it touched some of the resistance level that we talk about, especially at the 20 days and 50 days moving average. Okay, so that's all I have for today. Anything else to add, Gerald?
Yes, so I think really now that we are over the earnings season, back to look at some of the macro indicators, as well as whether the Fed will cut interest rates in December, and whether that will drive a year-end rally for us.
Yes, okay. And I think that is all the updates that we have for today. We are still keeping you updated, even though we are going to holiday season. So we will catch you again next Monday in the next weekly market review. Okay. In the meantime, trade safe and stay safe, and we'll see you in the next one. Goodbye.
See you.